beautiful day it is out today. To start off, I just want you guys to become familiar with BlueJean if this is your first time. Up in the right-hand corner, you will see a spot called chat. I'm muting you guys all and for video, but if you have any questions, go up into the chat section and you can just type some questions that you may have during this presentation and I'll answer them to the best of my knowledge. So the people who are here today are freelancers. So this probably would describe you, somebody who's done work remotely for another business as a contractor. You've done stuff based on your profession as like HR. You may have been very good at translations. A lot of people are like designers and as so forth. So if this describes you, you're in the right spot. And if not, I'm sure a lot of this stuff you can take away and tailor it to yourself as well. Okay, let's start going. My name is Karina. I am a professional accountant, do taxes here in Alberta, but am very knowledgeable across Canada. So today I'm going to touch on the organization of your books and registering your business. As discussed before, freelancers, you guys probably started this sooner this year and probably more than likely need this guidance just so that you can keep yourself out of trouble with Canada Revenue Agency and get those additional tools that you need. Today we're going to discuss the business structure for you and what is right for you. This is a very good topic because I find that a lot of people who are starting off, there's a lot of lingo that's thrown around as a small business owner, incorporated, not incorporated, and we're going to touch on the difference between these two and describe a little bit more about where you fit in. And then we're going to talk about the saving your receipts. This goes along with the fact being that you're making revenue now, and because there's taxes on there, you got to offset these amounts that are going to be owed to the government by the amounts that you are using to purchase additional tools, materials, and that for your business. And then we're going to talk about the bookkeeping, accounting, and when to file your taxes. I find that as an accountant that we tend to get a lot of people who are proprietorships and they don't know kind of the best way or where they should be doing or how organizing their books or when to be filing their taxes. So this will be great information for you guys so that you guys don't miss these deadlines and find that you guys get yourself into a bit of a rabbit hole. Okay, so what type of business structures are there and is it right for you? There are three different types of business structures. There's the sole proprietorship. This kind of falls a lot under the use of words of business owner, small business owner, self-employed. You'll also hear people say, well, are you proprietorship? That is also the word that you be used for a sole under this as well. Then there is the partnership, which means, okay, so sole proprietorship, you're doing something yourself. You could be doing HR stuff, but let's just say now that you have a friend that's coming in and she does more of the contract side of stuff. So you decide that you come in together and join to do like a combined business structure so that when somebody pays for your services, the revenues are then brought in and split 50-50. So that's kind of like a partnership. Complemented services that are split based on your business model. And then there's the incorporation. A lot of people think that, hey, I can't incorporate because I'm too small. That's not a case. As we move on, I'm going to tell you that being incorporated actually takes precedence of not just revenue, but the risks and additional areas that would kind of safeguard you from other things. But we're going to talk a little bit more about that in a second. So what is the difference between a sole proprietorship and a corporation? Now, a sole proprietorship is very simple to form. A lot of people find that you actually become a business owner once you bill somebody for a service that you are rendering. It didn't really take much. It just said, I'm going to do something for you in exchange for money. Boom, just like that, you become a sole proprietorship. And now you're supposed to keep track of the revenues that you make. You're responsible for all the debt. As you grow your business, you might have to take out loans to buy additional things for your business as it grows. If anything happens, you're definitely responsible for this debt, and usually you have to sign for it if you take out large sums of money for your business. There's the business name aspect as well. There might be a time where you're starting to do your business and you're just running off your own name. You're probably saying, my name is Susan, I do HR, so we're just calling Susan's HR. But eventually you're going to probably adapt to a name, which then you're going to have to actually register as a trade name, but you're also supposed to register with the city to get a business license because you're not allowed to actually operate a business in your home without a business license. It could actually get you in a lot of trouble. And then it's not safe from legal liability. So this is the part I'm talking about that you should have insurance on your business based on what you do, because if for some reason you don't meet a contract or somebody has a dispute with you, they can say that I'm going to sue you, and nothing that you own is going to be safeguarded. So if they want to say $1 million, you basically take all the equity from your whatever you own, and that's what has to pay those bills. That's where the difference between a sole proprietorship and a corporation comes into. So we're going to discuss a little bit more about that. And then the taxes are filed with your personal tax return. At the end of the slide, I'm going to tell you how that's done, but theoretically, a sole proprietorship is always filed with your personal taxes. Now, there we have the incorporation section. This is definitely a little bit more complex, because when you are a proprietorship or a small business owner, once you sell something, you automatically become a business owner. Now, when you're incorporated, there's a lot of legal paperwork that you have to file out, and the cost of registering your sole proprietorship is usually $100 versus the incorporation that could run you $500. So there's that difference. Inside CorPro 8, we do both of those for you to make it very easy, so it's not too complicated for you. As well, now it's a legal entity. As a sole proprietorship, you are the business. When you become an incorporation or a corporation, same thing, you are now, that business now is technically classified as a person. So let's just say that for legal contents, that now if something goes wrong, it is the business that sues you. That's where that legal protection comes in. And it is only the assets in that business that could be at risk, not yourself. And then, of course, there's the business name. What I get a lot from small business owners is, if I have a registered trade name with my proprietorship, can I move that over to my corporation? The answer is yes. You just have to re-register that name over to your corporation. The benefits of registering a trade name is the fact being that you don't want to be infringing on somebody else's territory on a name that they're already using for their business. So it's very professional for you as a proprietorship to register that trade name, so that you know that it's now yours and you're not using somebody else's name for that business. And then the taxes for a corporation is done at a different time than a proprietorship. So that's something more you'll talk with your accountant on, and picking that. Inside of our CorPro 8 program, we actually do more details about talking about year ends and additional stuff. So a lot of different questions I do get about asking about proprietorship and corporation is, what is that threshold when you should be changing over between one and the other? Well, like I said before, there's a couple of different things. First, you have to take a look at your liability. Then we have to look at what the revenue is and the tax savings on that side. And then what is your overall business plan for growth? There's a couple of aspects that are in there. I'm not going to touch too much more on that today, because we do have that inside of our CorPro 8 program. Now, let's go back to the receipts section when you became first a brand new entrepreneur here. So at this time, when you are actually invoicing out and billing to somebody, you're supposed to have your invoice book that keeps track of all the revenues you're going to make. And of course, you're going to take all those papers and give it to your accountant and say, this is the revenue I made in the year, and I have to pay taxes on it. But hey, why would you want to pay taxes on that full revenue when you know that you took some of that revenue and you bought products or some types of additional, like programs for your computer, or bought equipment like your computer or phone or other things that helped you make money for your business? So you do have the ability to lower the amount to pay taxes on your revenue by capturing those receipts and using them against the revenues that you had. So now you might ask me, what are some of those expenses can I claim? So before I kind of tell you a little bit more about this, let me tell you a story about, I had somebody who was doing IT work for a small group of people, and it kind of grew. Just earlier this month, I found out, he came to me and he's like, yeah, I've been doing IT work and helping people install their computers and the programs and all that stuff. And I was like, okay, so did you claim the income? Well, what he didn't realize was that he was supposed to be doing it, and he's been doing this for 3 years, so I had him end his taxes. So he brought in all his invoices, because I think he was using a program called Wave, and he got all that and he gave it to me, and I was like, okay, well, this is the revenue. What about those expense receipts that you paid? For example, he had to pay for fuel, he had to pay for like the hardware he was installing, and a whole bunch of other stuff. Well, he says, I didn't keep those receipts. And I was a little upset, because, well, when you're a business owner and you don't keep track of your receipts, If you don't keep track of those receipts, then I can't use them as deductions and I can't lower your taxes. And it is by CRA's law that you have to keep your receipts if you're going to use them as deductions. So he actually had to go back and try to find all the receipts for his purchases, the inventory that he bought, the computer program stuff he bought. And, there's maybe 50% of the receipts he weren't able to get. So I think it's really important to express that at this time, as you're starting out as a freelancer, that you keep all your receipts and print them off and then store them into a file. And then when we're giving it to the accountant or the bookkeeper at the end of the year, that you have everything. It's very important. So let's go on to the different types of expenses you can claim. So there's pre-business startup expenses. I think that a couple of you may have been doing this for a bit and you might be like, oh, what are some of the pre-business expenses can I deduct? I'm like, well, first of all, before you started, I'm sure you probably went and you had to do some mentoring or something like that. So there's some fees for that. What about some additional training that you had to do what you're doing? Well, those are deductible too. There are your registration fees. As we discussed, you still have to register your business with the city or town that you're in, and the registration of your trade name. We also have, which at the end of this, we'll send you the money saving guide, the tools that you have to buy. So I don't know what kind of professions you guys are in, but here are some things you got to consider. You have your computer. What about the keyboards? What about the mouse? What about your Word, Excel programs? What about all those apps that you're using for running your business? Yes, they're all deductible as long as you have the receipt. One of the questions might be, what about the meetings I have with my clients? That goes under food. Keep your receipts for those and the client's name on top of the receipt. Those meetings are deductible as well. Another thought is, as discussed, the registration of the business and any of the fees that you had to pay along it. Kind of like my little thing is, whatever you paid to operate your business is deductible. You just got to keep your receipts. Let's move on to bookkeeping, accounting, and when to file your taxes. As expressed with this, if you're a sole proprietorship, small business owner, you have to have everything in to CRA and filed by June of the next year. So your beginning year is January 1st and your end is December 31st. And you take all that information and you give it to your bookkeeper accountant, and it's filed no later than June the next year. However, just to let you know, the taxes have to be paid in April. I know a lot of people say, okay, this makes no sense. I have to file by June but pay my taxes in April. Yes, that's just the laws that they are. So hopefully you make an installment that's big enough to cover the taxes for that revenue that you made. Now let's talk a little bit further about how to organize your documents. There's actually two different sides of this. So when you're starting out, you tend to be a lot smaller and you don't have a separate bank account most of the time for your business. So a lot of people, I'm sure of it, have all the deposits going to their bank account and all the expenses are coming out of your bank account. So my recommendation is to keep a folder that has all your revenue in one spot, and then you're breaking up the expenses based on their expense category. Your bookkeeper or accountant should be able to provide this list for you, and then you're totaling it at the end of the year. If you're a person who's gotten a lot larger and you kept a separate bank account for your business, which I really preferably like to see as an accountant, then you're printing off your bank statements and putting the receipts behind it, and you're providing it for us to do the bookkeeping, unless you have a program like QuickBooks to do it in for yourself. Now the next subject is finding a good bookkeeper or an accountant. Oh, this is my favorite subject because I've seen so many interesting people saying, I'm a bookkeeper, and they really don't meet the bookkeeper definition. They're just data entries. Now, there's a couple of levels. When you're looking for a bookkeeper, I would kind of ask them roughly what their credentials are of their training. So did they learn on their own, or did they go and learn in an accounting or professional atmosphere? Because if in their professional atmosphere, they would have better understanding of your business and the expenses that they're looking for. If they're self-taught, more than likely they're just data entry people and they're just going to put in whatever you want, and then you're going to miss out on those deductions. So yes, it's worth a little bit more money for those people with that experience, but you get the best deductions for it. And for your accountant, I'd probably ask if they've kept up with the current things that are going on. Why is this important? Because like chess, the game's rules, everything changes, and you want to make sure that they're familiar with what's happening in that year. We have a video on our website page to discuss more about that. So now we just covered determining the business structure, what's right for you, which basically will help you navigate between the two, and then saving your receipts, which is very important as a business owner. We're going to send you something here shortly that will help you with pre-business expenses and other things to think about, and finding a bookkeeper or an accountant. Now, I'm going to take this time because there are a lot of different questions that people might want to ask, and I would like to take this time to address something that maybe you guys find very important and would like some answers for. I'm just going to take anybody who wants to start in the chat, and we'll start there. Okay, Megan just asked me about home office expenses for your businesses. All right, let me explain that. Yes, the use of your home space is deductible in your business. At the end of the year, what I tend to do is I give my clients an Excel spreadsheet that says, give me the totals that you paid for each one of these categories of the utilities of the home and space and additional things. And I actually take a pro rate of that and I then apply that to the revenues so you can pay a little bit less during the year. Alicia asked, what if I'm paying somebody to do the work for me? This is a great answer. As a proprietorship, you're going to find that you're going to actually contract some of that work out to somebody else. And let me tell you that you can pay them, even if this is your daughter or someone who's a relative to you, you can. So you'll pay them, but you're going to need to get an invoice or some type of bill for them that says that you paid it for them. So even if you go to like the dollar store and got one of those little books for stubs that says, this person received X amount of dollars to do this type of work, that is fine too. You just need some type of document that says you paid them for that work. What about my cell phone? This one comes up a lot. Let's talk about the cell phone. So this does get audited quite a bit for the small businesses. And as an accountant, yes, I do deduct it, but it's actually based on a pro rate. This is because you use your cell phone partial for the business and the other part is personal. So we kind of go through the list and say, based on this cell phone bill, we used this amount of percentage and we deduct that percentage during the year. How hard is it to incorporate? Okay, so the incorporation, how hard is it to incorporate? Okay, incorporate on the inside, we actually do a step-by-step guidance for you to do in the incorporation. So it's very easy and very understandable for you to get through there. It doesn't take that long. It's like a 24-hour period and you can be incorporated. And we also give you the steps afterwards to make sure that you are set for like the Canada Revenue Agency side of stuff and how to set the bank account part of it. Do I charge GST, PST on American clients? Okay, so this is going to go back into the sales tax area. I'm going to talk about two parts to this. So no, when you are purchasing for something from the United States, there is no sales tax on it. So you can't claim that. Now, let me go a little bit further. A lot of people might ask me, when should I start up my GST? That should be after 30,000. And is there any benefits to do before that? Yes, there is, because even though you're small and you don't make a lot of money sometimes, the money that you put out tends to give you a credit back from CRA. Now, let's just say you're buying stuff from the States. This goes back to that question, and you're bringing stuff in from over the border. You're going to be paying a tariff for that sales for that product. That is like a sales tax, and that is actually like a refund for you under the filing of your sales tax. Oh, websites. Your websites, yes, are deductible. You might have a professional one started up. Those fees, as well as your advertising and any of your hosting fees, are all deductible as well, and you should have them in with your business as expenses. Can I have family members as business owners? Okay, so I see that somebody says that their family member is doing work with them. As long as they're doing work with you, you can split the income, but it depends on the way you're set up. If you're incorporated, your shares might be divided up that way, but if you're a sole proprietorship, that becomes a partnership and it's divided that way. Back to guests again. I'm a consultant, so only services given to Americans. If you're a consultant and you're providing services to anybody who's south of the border, there is no sales tax on that at all. I would suggest you though, sign up for a GST number because you're still going to have ITC, like they're called ITC credits. Incorporate, go in there, there'll be more of an explanation for you that can give you money back despite the fact that your sales have no GST on it. So it's more in your benefit to still have a sales tax. But no, your invoicing should not have any sales tax on it to anybody south of the border. Clothing. Oh wow, I'm getting a lot of questions about deductions. Okay, so there is clothing is, for me, I have a certain rule, but your accountant might have a different rule. For me, I say yes. If you're buying clothing and you have to dress very professional for what you're doing, like you have to have a particular shirt and you're going to meetings and you have to dress a certain way, I kind of give them a clothing allowance. The only thing about CRA has is they're saying, is it needed? I would put your shoes in or your everyday shirt and jeans that you're doing, and I wouldn't even push the envelope on that one. Okay, so what are the benefits for incorporating? There's so many benefits, and the list is quite long. I don't really want to go too much in discussion. I would suggest you go to the Core Pro 8 program. We have great reading in there and material for you to make that better decision, because what I'm going to tell you today may not suit for this person, and it's like kind of more like it's based on your situation. All right, is there any other questions that we have for today? All right, so we have additional blogs you can read on our Core Pro 8 website that hopefully will navigate you. If not, like I said, it's highly recommended that you go through our Core Pro 8. If you don't know what you're doing for your business, missing a couple things, definitely go through there. It'll also teach you how to pay yourself as well. A lot of people don't understand that there are certain things you need to put aside to make sure that you're not in trouble with CRA, and I think that's also very important to touch on. I know expenses are very important, but also to make sure the amount of money that you need to set aside is put aside for CRA is very important as well. Okay guys, thank you very much for joining me. You will be getting emails shortly with this video, the seminar that we put together, and I hope this will help you navigate you through your journey. Anyways guys, have a great day.